Opening a bank account for a DIFC foundation in Dubai is often seen as a major hurdle. Many founders and families want to know, can you really get a working bank account for your foundation? Or is it just a theory? Some have heard stories about banks saying no or asking endless documents, all in the end to get rejected. Others aren't sure what's changed since Dubai's tightened its banking rules. So in this video, I'll explain what it takes to open a bank account for a DIFC foundation, which banks are possible, what makes the process difficult, and how to give yourself the best chance of success. You'll know what to expect, what's realistic, and what steps to take if you want an actual working bank account for your foundation. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. So let's start by looking at what a DIFC foundation really is from a bank's perspective. Unlike a typical company, a foundation is a legal person with no shareholders or owner. Instead, you have a council, a founder, and beneficiaries. And critically, the foundation assets are ring fenced. This means the assets are legally separated from your personal wealth, and the council manages the assets according to the foundation's charters and bylaw. For the banks, this introduces a different risk profile compared to dealing with a trading company or a straightforward personal account. They need to establish exactly who is behind the structure, who controls it, who benefits, and what the purpose of the account will be. Now, the question that most clients ask is, can you actually open a bank account for your DIFC foundation in Dubai? The short answer is yes, but the process is much more involved than a regular company. Not every bank is willing, and the level of scrutiny is high. Most major local banks in Dubai, including Emirates NBD, Mashreq, and Emirates Islamic, do not accept foundation clients, but only if you can demonstrate full transparency and legitimate purpose for the structure. So you will need to satisfy rigorous KYC or know your customer requirements and the source of funds checks. International banks with a presence in Dubai, such as Standard Chartered or HSBC, may also allow account opening for a DIFC foundation, but expect even stricter requirements and a longer onboarding timeline. So, what makes the process challenging? Well, the biggest issue is demonstrating the genuine economic purpose of the foundation. If you are setting up a foundation purely to hold assets passively or for estate planning, the bank will want to understand exactly where the funds are coming from, who the ultimate beneficiaries are, and what transaction you plan to carry out. Any suggestions of nominee arrangements, secrecy, or attempt to conceal the origin of wealth will raise red flags. Banks in Dubai are under intense pressure from global regulators to avoid any structure that looks like it's being used for money laundering, tax evasion, or circumvention of sanctions. Another issue is documentation. Banks will require full details of every individual involved: the founder, council members, guardian, and ultimate beneficial owners. They will ask for notarized and attested passports, proof of address, CVs, detailed source of wealth documents, and sometimes even tax filings from your home country. If you are holding assets on behalf of a family member or for cross border planning, the bank will want to see supporting documents such as wills, trust deeds, or letter of wishes. If the foundation has links to high risk countries or politically exposed persons, the due diligence process will become much more intense. You should also be prepared to provide a detailed explanation of how the foundation will operate. Is the account purely for holding investment assets? Will there be regular income and outgoing payments? Are there plans to invest in property, hold shares in operating companies, or collect dividends? The clearer and more legitimate your story is, the better your chances of successful account opening. If the foundation will interact with offshore companies or accounts in other countries, you may be asked for even more evidence and justification. Now, let's address a common misconception. Opening a bank account for DIFC Foundation is not guaranteed right away. Even though DIFC foundations are fully recognized and regulated under Dubai laws, banks can and often do refuse accounts for structures they don't fully understand or not comfortable with. This is why it's so important to select the right banking partner and prepare your application with professional support. Some private banks and boutique wealth managers in Dubai are actually more receptive to foundations, especially when dealing with high net worth clients and family offices. These institutions are used to dealing with complex structures and may offer more tailored onboarding but often requires higher minimum balance, sometimes upwards of $1 million. Let's consider how account opening for a foundation differs from a regular company. With a standard Dubai company, the bank is generally satisfied by seeing your trade license, shareholder register, and a clear commercial purpose. With a foundation, the commercial activity is usually limited or non existent, and the focus is on holding, managing, and transferring wealth according to your wishes. This means that risk assessment shifts from what the business risk is to what the legal and reputational risk is. Banks want to see that your foundation is being used for legitimate asset protection, succession planning, philanthropy, or wealth management, not as a shell company used to hide assets or circumvent laws and rules. There is another subtle but important point. While DIFC is seen as a gold standard jurisdiction in the region, and foundations here are often viewed more favorably than those in other offshore jurisdictions, you still need to make a case for the structure's legitimacy. Dubai's banking sector has tightened dramatically in recent years. Gone are the days when you could set up a foundation or offshore entity and open bank account with minimal questions asked. Today, every aspect of the structure is scrutinized, and anything that doesn't fit the bank's internal risk appetite can lead to delays or outright rejection. Now, you may be wondering if it's easier to open an account in another country instead, for example, in Switzerland, Singapore, or even offshore centers like Cayman Island. In practice, it depends on your profile and your foundation's purpose. International banks are also very cautious with new clients from Dubai structures, especially if the foundation's beneficiaries are from high risk or sanctioned countries. However, if you can show clean source of funds, full transparency, and a legitimate wealth management or estate planning need, you may be able to open an account and selected international banks. But expect even more scrutiny and potentially higher entry threshold. So let's discuss some practical scenarios. If you want your DIFC foundation to hold and move money, you will need to plan for banking process from the very start. This means choosing council members and founders who are acceptable to banks, gathering all relevant documents in advance, and preparing to explain the foundation's purpose in clear, compliant language. It's wise to work with professionals who has experience both with the foundation setup and bank onboarding. Sometimes a single poorly worded application or missing documents can cause months of delay or kill the process entirely. There are also a few important limitations to keep in mind. Certain types of assets or activities may trigger enhanced due diligence or outright rejection from the banks. For example, if a foundation is holding cryptocurrency, interest in high risk industries, or is linked to countries on global watch list, most banks in Dubai will simply decline the account. If your foundation is being used to hold real estate, shares in operating companies, or traditional investment portfolios, your chances of success are significantly better, provided that you can demonstrate a clear source of funds with evidence and the purpose of the foundation with clarity. Another common concern is ongoing compliance. Once your foundation has a bank account, you're not finished with paperwork. Dubai's banks are required to update KYC documents on a regular basis, often every year. And the banks will review all transactions to ensure they match the stated purpose of the foundation. Large incoming transfers, payment to new jurisdictions, or activity that look unusual can all trigger requests for additional information, or even temporary account freeze until questions are resolved. If you are using foundation for long-term family succession or wealth holding, it is critical to keep all the document and compliance up to date. You should also consider practicalities or multi-signatory accounts. Banks in Dubai typically require council members or authorized signatories to be present in person for account opening. This can be an issue for international families or global investors. Some private banks may offer more flexible onboarding, but these are typically reserved for larger accounts. Now, let's not forget about the costs. Account opening fee, minimum balance requirements, and ongoing compliance costs can be significant. Some banks in Dubai requires a minimum monthly balance of $100,000 or more for foundation accounts, and falling below this can trigger fall below fee. For private banking relationships, minimums are usually much higher. You should factor these costs into your overall planning, especially if your foundation is holding assets for the long term. So, what's the bottom line? Opening a bank account for DIFC Foundation is entirely possible. And for many families, business owners, and international clients, it is a powerful way to hold, protect, and pass on wealth. But it is not automatic, and it is not always straightforward. The key to success lies in preparation, transparent documentation, a clear and legitimate purpose, and professional support throughout the process. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.